After a nearly 8-month hiatus, longtime Tesla bull Cathie Wood bought the dip when Tesla shares were falling since the stock's recent slow rise back into the positives. Wood declared optimism about how Tesla's stock price will perform this year with a price target of $3,000. Wood stated that Tesla stock will triple from here. What are her reasons to support this prediction? How does Tesla deal with today's increasing competition? Do other experts and analysts agree or disagree with Wood? Keep watching to find out. Recently, exchange-traded funds managed by Cathie Wood's ARK Investment bought 33,482 shares of Tesla stock. Shares closed at $829.10 at the time of purchase, down 11.6%. Wood paid an estimated $27.76 million for the shares at that price. The famous Tesla Incorporated bull and star stock picker took advantage. From a decline in the electric car maker's shares after its results and a pile-up in the shares after months of reducing holdings. These were the first Tesla funds the company had bought since the recent sell-off, after the stock price hit an all-time high. We think these actions speak loudly to renewed confidence in the share price and Wood's vision for what's to come this year, and it's been about 8 months since the company bought new shares of the brand. Cathie Wood is known for her future-focused strategy when it comes to stock picking. Her investment firm, ARK Invest, owns shares in companies like Coinbase, DraftKings, Roku Block, Teladoc Health, Tesla, and Zoom Video. Wood stated that traditional investment methods often underestimate the value of revolutionary innovation because people may not realize how large the ultimate opportunity is. They do not evaluate the size of the opportunity or understand the radical change. However, Wood raised her price target to $3,000, 3 times what the stock was last year, in a debate against Rob Arnott, who has been very wary of high-priced growth stocks like Tesla. My guess is that if nothing changes in our forecast and we get to $3,000 next year, we'll get out of it, Wood said. Very optimistic numbers, in our opinion. So let's look at the current situation. After a long period of decline in Tesla's stock price, even before its very impressive Q4 2021 earnings announcement, Tesla stock is finally climbing into positive territory. Many analysts and investors expected exactly the opposite. They expected the value to rise after the amazing report for the fourth quarter of 2021, but the stock fell further. Investors began selling their shares as they feared the interest rate hike that the Fed planned to implement, which caused the value of the stock to fall further. Truth be told, it's been a tough year so far across the board for all stocks, but especially for growth stocks. Most forecasts are shaky at best. So exactly what are the odds of Wood's prediction coming true? When asked to explain why she thinks Tesla will go triple this year, Wood cited falling prices for battery systems, as well as the benefits of electric cars, such as the fact that she hasn't had to travel to a gas station since September 2018. It expects the average price of an electric car to fall below the price of a gas-powered car next year as a result of these declines. This trend is expected to continue until 2025, when the average cost of an electric car will be about $18,000, compared to $25,000 or $26,000 for a regular gasoline car. We're with the woodwork on this one, as Tesla seems to be making big leaps in this particular area. It has recently emerged that Panasonic may begin mass production of high-capacity Tesla batteries as early as next year. The 4680 cell is expected to increase the range of electric vehicles by more than 15%, according to Nikkei. This could increase the Model S's range from 650 kilometers to 750 kilometers on a single charge. Nikkei also mentioned that the battery size is twice the size of previous generations, yet features a 5-fold increase in power capacity. As a result, cars will need fewer batteries, which are now 10% to 20% cheaper to manufacture. Batteries are expected to account for 30% of the cost of electric vehicles, so lowering the cost could make electric vehicles more affordable and accelerate the transition to electric vehicles. Panasonic, a longtime Tesla collaborator, is said to be spending nearly 80 billion yen, or roughly $704 million, on new equipment to manufacture the 4680. It is rumored to be expanding an existing factory in Japan and producing batteries there first. According to Nikkei, the company will begin manufacturing cells on a small scale this year in order to develop a safe and efficient process before entering large-scale production in 2023, and it is possible that batteries will be mass-produced in other countries in the future. The company admitted to Reuters that it would build a test manufacturing line in 2022, but did not reveal when it would begin mass production of batteries. Tesla's leading position on this front is sure to impact market sentiment and thus impact its stock market valuation. However, this may not last for long, although Panasonic has begun developing the cell at the request of Tesla. The head of Panasonic's battery division said the company has not ruled out manufacturing the cell for other automakers, although Tesla is the company's main focus. We remain optimistic about Tesla's progress, as Elon Musk has previously stated that Tesla intends to manufacture its own batteries. Regardless of battery technology, the more progress Tesla continues to make, the more market sentiment will turn positive. As the first quarter approaches the 2022 earnings announcement, we believe this shift will be greater, as experts have indicated that with the volume of deliveries this year, Tesla is sure to have a good first quarter report. What do analysts think about Wood's price target? Do they think Tesla will go triple as Cathie Wood stated? Analysts appear to agree with the famous investor's predictions, noting that Tesla's market dominance and potential growth will likely remain unmatched by the slew of competitors vying for its position. AdvisorShares CEO Noah Hammond, who recently bought $1.8 million worth of Tesla stock, said Tesla has a lot to achieve and no real competitors. Tesla's wheel to bolster its infotainment offerings, which just added TikTok and Sonic the Hedgehog games, as well as the imminent launch of Starlink satellite internet, will significantly improve features and margins, according to Hammond. This, combined with plans to significantly increase production and perhaps introduce a smartphone, would reach over $3,000 by 2026 or 2027. Hammond stated that within 5 years, Tesla would have large subscription services similar to Netflix or Disney. Plus, in addition to launching Starlink, autonomous driving, and even insurance products. This would put them miles ahead of the competition, according to Center for Financial Research and Analysis analyst Garrett Nelson. Tesla stock could quadruple within 5 years if Musk continues to execute effectively. A lot of things have to go right, he added, but if you look at their guidance, they expect a 50% annual increase in car sales over the next decade with the help of the new Texas and Berlin plants. So there is a lot of room for development, but other analysts are more skeptical. According to Awanda analyst Edward Moya, timber and other Super Bowl price estimates are overstated. According to him, it may be scaled back soon because U.S. Senator Joe Manchin recently rejected President Joe Biden's Build Back Better plan to boost green energy adoption, delaying and killing the legislation. Moya makes his point by saying that Cathie got involved in exciting the electric vehicle market. But I believe that its price target, as well as many others, will be lowered after the Manchin Grinch gesture, which could lead to $2 trillion in investment losses. Combined with some interest rate hikes, it creates an unfavorable climate for riskier assets. Moya also poured cold water on Tesla's self-driving or full self-driving service, claiming that it would not fully work as quickly as some had expected. He said, "I expect delays when it comes to full self-driving or autopilot initially. There will be significant regulatory challenges." Elon Musk has declared his confidence in this regard. During Tesla's Q4 2021 earnings call, Musk expressed confidence that the company's full self-driving suite will be completed by 2022. Musk said people don't yet realize how useful a self-driving car will be, after which he expressed his opinion and said he has confidence in his predictions, stating that if Tesla does not achieve full self-driving by the end of the year, he will be shocked. Although we would like to share his confidence, he has a history of making promises and not keeping them within the time frame initially stated. If Tesla can manage its full self-driving technology this year alongside its battery technology and deliver an excellent first quarter earnings report, we think Tesla's stock price should rise significantly. However, asking whether the price will triple this year, we are a bit skeptical on that front. Will Cathie Wood's predictions come true? What do you think of Tesla's Q1 earnings call report? Comment below.